If you like this video, make sure to subscribe to our channel and hit the notification bell icon to get the latest updates.
So what we did last time, we did charts of account, and we did completed our structure. So now today's agenda is very important. That agenda is having the completion of 4 C's and then your workday structure, that how you gonna map this structure with this structure that you need to fit in within the workday. That is the important part. Okay, now first we will complete the charts of account. And in charts of account, we will discuss implementation in a while. So charts of account is the calendar. So any business, you go for any business, that definitely go for the reporting part, and the reports that we discussed, that there are 3 reports: balance sheet, income statement, and cash flow. That all the reports are having for certain periods. That is for yearly basis, that might be monthly basis, and that is for daily basis.
Okay.
And that all of them are having these all are having for certain periods, and these periods called calendar.
Okay.
So you need to configure a calendar in the system in the workday. Basically, calendar are the 2 types of calendar. That is for your information. That is called fiscal calendar and financial calendar. So what is a fiscal calendar or financial calendar?
So fiscal calendar, that is determined by the periods of the organization. So it doesn't follow the generic like year calendar we have.
Well, yeah, depends. It's a whole completely depend on the business, that how they are making their calendar.
Yeah.
So fiscal calendar, it may be started from normally a corporate business. If a corporate business is there, then they start up the calendar and their cash transaction or the bank transactions from 1st of July till 30th June.
Yeah.
Whereas the financial calendar can be at 01 Jan to 30th December. So these defined in the workday, and that will be defined as a fiscal and financial calendar. And in workday, you remember that we have fiscal schedule where we define our calendar.
Yeah.
Okay. So that is there. This is our second C's.
Okay.
Now we are moving towards our third C. That is currency.
Currency, yeah.
And do you know that how many types of currency we have?
No, I think Workday will take all the currencies, but you can define.
Not only Workday, every application define the currencies, but for the business perspective, we are talking about 4 C's.
Okay, so this will be the preferred currency defined for the business.
Yeah. So what for the business, what we call that currency?
The preferred currency, would that be?
Yeah. What we called it, that preferred currency. Okay, for that currency, for example, you are in the USA.
Yes.
So this USA currency is the USD.
Okay.
That in your business in the USA, for example, your business is new tech company. So that 99% chances that your company business will be USD.
Okay.
But if your company is in the UK, then that currency will be GBP.
Okay.
So country design the currency of your company.
Okay.
But that is not mandatory. But somewhere New Tech said that we are going to open our branch in the Malaysia. So we will not go for their currency that MYR. We will accept only USD.
Okay.
So the business will decide that currency,
Mm.
not the country. So that
Okay.
currency called a functional currency.
Functional currency. Okay. Okay.
Some called it the base currency.
Okay.
Some called it operating currency, your business
Okay.
operating currency. So
Okay.
all of them meanings are the same.
Mm.
Okay.
Yes.
Okay. So this called this one. Now there is another currency, two types. Okay. So the second type is for the business perspective called foreign currency.
Okay.
Okay. So you have to decide it. What is your charts of account that we discussed?
Mm.
Charts of account we discussed. That is my charts of account name is, for example, my company name is Newtech or Starlink that we discussed. Starlink. So that my charts of account name is Starlink SLCOA, Starlink charts of account.
Chart of account. Yeah.
And my calendar name is somewhere SL calendar. Then my currency is the USD. Then USD will be decided once it will be selected. Then other than USD, all the currencies are my foreign currencies. Either
Okay.
it's GBP, MYR, or INR, PKR, or yeah, all of them other than the yen.
Mm.
So these are all foreign currencies. So my 4Cs are ready now. Now sorry, 3Cs are ready. What is the 4C?
Convention. That's what we said yesterday.
Yeah. So basically we call convention.
Mm.
The actual name is accounting convention.
Okay.
So for example, you go in a departmental store, okay, and you purchase one smartwatch.
Okay.
And smartwatch cost is somewhere $500.
Mm.
So when you go to you select the watch and then you go to the counter, then you will pay this amount. Okay. So
Okay.
so you check your wallet, then you don't have you have the $500 in your wallet, and you pay to the cashier,
Mm.
and you receive that amount. You receive that smartwatch.
Yeah.
But in case if you check your wallet and you don't have $500 in your pocket,
Mm.
because this is some a big amount, so what you will
Mm.
do, you will present or you will share with the girl or the cashier your credit card.
Okay.
So the one way is that you pay it through, okay. So when you present your credit card, so cashier will swap that card, and the girl will consider that you paid that amount, and you will she will hand it over the smartwatch. But
Mm.
basically, on your behalf, bank has paid this amount to the
Yeah.
department store. Okay,
Yeah. Yeah.
meaning that you are now liable to pay to bank.
Mm-hmm.
Okay, you are liable to pay to the bank, and in the accounting, what if you are liable to pay something to someone? So do you know what is the accounting term?
You are in debt. You owe the person.
You owe the person, but more specific accounting term that has been used, you are right, that has been debt, you are in the debt. But
Okay.
more specific accounting term that will be used, that you are in accrue state.
Okay.
So meaning that one transaction is the cash transaction and other one is the accrual transaction.
Okay.
That you pay this amount to the bank somewhere in future. So in the business, you deal both transactions. Either it is a cash, or when you purchase something, then the supplier will pay this some. Okay, you purchase the LCDs for your business, and you said to the supplier that when you deliver this item, then next 30 days, after 30 days, I will pay this LCD amount. So meaning that you receive that amount, you receive this LCDs, but you will pay that amount in a future date. That means you are liable to pay to the you are liable to pay to the supplier in a future date. So you create accruals. So there are both transactions, cash transaction and credit transactions.
Okay.
And that credit transaction called accruals.
Accrual.
So these, yeah, in accounting we call these are two convention. One is cash, other one is accrual. So you have to decide it for your business, like you did for the rest of the three C's.
Yeah.
How you deal with your business.
Okay.
So if both are there, then Workday offered both of them.
Okay.
Okay. Is it clear?
Yeah, so we would define this convention on the chart of accounts.
No, we define this convention. Some ERP system you define it manually, whereas some ERP system that is predefined.
Okay.
So in Workday that is predefined. You don't need to define.
Okay, but so it will be part of the financial structure.
Financial transaction, yeah. So when you open up the reports, these three reports that we discussed last day, these reports, let me take into account. When you take up these reports, then you have to analyze that these reports having the what type of transaction they have. Bank transaction, cash transactions. Either they are cash basis or either there is accrual basis.
Okay.
So basically that will define your cash liquidity. Okay. These type of transaction will define you cash liquidity. Okay. So we'll discuss this thing in a more detailed way in our upcoming session. But today's is we will try to cover up the structure part. So this is there. Now come towards the implementation part. So Workday implementation. So I know that you are never been with the implementation perspective. So do you have idea that what are the implementation steps are?
No. So earlier on, like way back about 2 years ago, I did some training on SAP, and the first step would be to create like a blueprint, and then from the blueprint, that will be from your customer, and then you begin to kind of build it in the system.
So that's good. Okay, that is the one aspect that you did highlighted blueprint. Okay. But these are the detail phases there in our implementation. Whenever we go for any implementation, then these phases are important. So we will discuss these phases in a later stage. First, we will conclude our charts of account structure. Okay. So now we have the organizational structure, we have people structure, we have financial structure. Now we need to fit in the Workday structure. Okay. So first of all, we need to understand that what are the structured steps. Like we did discuss, that is the highest level, that is the lowest level,
Mm.
Here we have the highest is CEO, lowest is the assistant accountant,
Mm.
group is the highest, and the lowest is the warehouse or
Yeah.
location.
Yeah.
Similarly, in Workday, what is the highest and the lowest level? Do you
Mm.
have idea? Can you say something?
Um, I'll say the people,
Mm,
the people that'll be the first, and then the finance.
okay.
Yeah. Or we'll say we'll create like a business process where this is the people, the business process, and they would assign the people to those processes and their roles, and then would add the transaction to it. So that's when the finance would come in.
Okay. So, but I'm specifically, if I ask you once again that how you define or say that the what are the workday structure, then apart from people, what comes in your mind?
Apart from people,
Hmm.
business process.
Okay, say something. Business process.
Yeah, business process, and then also the finance, financial
Okay.
management.
Okay. Let me explain you that area that what is the workday structure that has been there, and that is very important that whenever you join any organization,
Mm.
you first verify these areas at your first interaction with the system. For
Okay.
example, I have this system and I today I just joined, so just I log in. So when I just log in, then what, and I have some privileges as well,
Mm.
considering that. So I need to go for system at how can I check that my company name is the company name that you can see in the system is something. Just give me 1 minute.
Okay.
Yes. XP. Give me 1 minute. Oh, JF. So my company name is JF company. Jan Foster.
Okay.
So this is my company. So you are hired in this company. So the first and foremost part is that you have to review the company.
Okay.
Okay, how many companies are there? So just to go related action button, then you have org chart.
Okay.
So here only one company exists. But for example, I would open up this company. Then this will give you the idea that how many org charts organization, yeah, org chart is here. So you can see that this is the company, the person is the owner, is Teresa.
Mm. Mm.
We have Chicago, Boston, London, Atlanta, New York, San Francisco. These are the number of companies are there and people
Mm.
are assigned to this one. So first and foremost part for any company, you will go for it and check its org chart so that you have idea that how many companies that we have it
Okay.
and
Okay.
is been defined. Now, this is for the one company aspect that I am highlighting right now. But if I talk about the structure, then at the top most in Workday is the reorganization.
Okay.
What is a reorganization? Have you heard before?
Yes, I have heard it before.
Oh, what's in your mind?
So the reorganization is like, I mean, like it's not a temporal company, but it's just to help with deployment. So we create the reorganization and then we create the company in attached to this reorganization.
Okay, okay. Let's rediscuss once again. Okay. Once again, I will explain you this thing.
Okay, okay.
Reorganization, then we have supervisory organization.
Okay.
So do you know what is supervisory organization?
I
Let's
think,
name it and then we will discuss one by one, okay?
okay.
In the supervisory organization, after that, we have company. And before that company, we have company hierarchy.
Okay.
And under that company hierarchy, we can define the regional hierarchy.
Hmm.
Then we have regions. Then we can design, this is optional, but we can design division as well.
Hmm.
Then under that, we have cost centers. And under cost centers, we have locations. And before cost centers, we have cost center hierarchy.
Okay.
So we have it here, this one. If I say that this is the number one, this is number two, that is number three, and that is number four,
Hmm.
5, 6, and 7. Now, what is supervisory organization?
So in this case, supervisory organization will be and, the thought that is coming to my mind is like board of directors, but I don't think that would be it. So let's say in our case, Starlink, the parent company will be the supervisory organization, and then the companies below that. So let's say New York company, France company, and then London company. So those will fall under the supervisory organization. Or so in the supervisory organization, we can say the group.
Okay.
Yeah.
Okay. So company is very clear, that company is there, region is very clear, divisions, cost center.
Mm.
So these two terminologies, that is very important to understand the workday structure.
Okay.
Now here, in the workday structure, when we talk about reorganization,
Mm.
for the implementation and what you said earlier,
Yeah.
that is okay. But if I give you a clear concepts, okay, so how you do that? For example, you have a laptop
Mhm.
and there are two drives, C and D.
Okay.
So in the C, you have all the window informations,
Mm.
and D you can use for your personal information. Okay, now in the D, you have two companies, Starlink USA, Starlink UK. So in the D, for example, you visited in your official trip when this year in this December in your Christmas Eve, You visit, for example, in somewhere Siberia. Okay, let's name it a different word. Atlanta, just to give you one. Okay. And you visited and you take some steps there. And what happened? Then your company said that after Eve next month, and you will go to Canada. You visited there and you take some stuff. Okay. So when you came back and you save your snap in the D drive, definitely you will create some folder there.
Yeah.
You will see that this is Atlanta folder, Atlanta trip, like this somewhere this way, okay? And you have a Canada trip, okay? Basically what you are doing, and then if somewhere in the future someone asks you, or your some friends will ask you, how was your trip in Canada and how was your trip in Atlanta? Definitely you will go in the D drive, you open up the laptop,
Yeah.
you go to the D drive, then you go for the relevant folder and show the snap.
Yeah.
If you say that, you ask them that how's your trip for Atlanta, you will never show them the Canadian trip picture. You will go for the specific folder. Am I right?
Yeah. Yeah.
So similarly, this I just put it this example. Similarly, in Workday, because Workday is a big application, and we have multiple companies there. So what happened? Workday give you some privileges that you can create some folders with respect of your organizational structure.
Okay.
So if you want to define any cost center, like you have finance, you have IT, you have sales, now you are going to design your another procurement cost center. So definitely they will ask you which folder that you want to define it.
Okay.
So reorganization is nothing to placement of your organizational structure information in a systematic way so that Workday control this thing in an efficient way, and they not mix with two different structures.
Okay.
So
Okay.
if I go to the Workday and if I want to define a create company, then when I create company, it asks me reorganization.
Yeah. Yeah. Yeah.
So if I want to define cost center, it asks me
For what company?
reorganization.
Okay. Okay.
So this means that you are basically creating a folder within Workday, which folder that you want to place these things. So
Yes.
you
Okay.
have official folder in your laptop. So someone asks you, can you show me your official files of last year statement? So would you open your this folder, Atlanta trip or Canada trip? Never.
No.
You will go for official. And if someone asks you that, okay, fine, I'm sending you a cash flow statement, so you save yourself and you have to present to our client. You are visiting to Canada, so you have to present the cash flow statement. So are you open up your Canadian trip snaps? Never ever. You will open up your official folder, then you have a cash flow statement there.
Yeah. Yeah.
So similarly, you will, when you are open up your system in front of your client, okay guys, we are having very good profit in our organization for this year, so we have to, I want to present you our cash flow statement. Okay, or I'm going to create a new cash flow statement for our new company. Then or a cost, I want to create a new cost center that we are going to define. Then you have to go for a specific folder that is
Okay.
in there.
Yeah.
Past 30 days. For example, here we have 3 folders here. Okay. So this reorganization is just like a folder within the Workday.
Okay. Okay.
You got my point?
Yes, yes, it makes absolute sense. So, how many reorganization can an enterprise have in Workday?
There is this, okay. Workday said that we have organization feature. You can define any number of our reorganization in the system.
Okay.
Workday didn't define any reorganization. This is by default. One, for example, this is a test environment.
Yeah.
So we have, a lot of reorganization as per our, we can define it.
Mm.
We have report here. If I can run it for you, reorganization report is here. I want to run for all of the whole time. That is 34 has been defined. There are any number of reorganization you can define in the system. Similarly,
Okay.
in your D drive, you can define any number of folder.
Folders. Yes. Yes.
Okay, so you
Okay.
can open up any number of companies: company A, company B, C, D, E, F, 1, 3, 4, 5. Any number of folders you can create it as per
Okay.
your business needs.
Okay. Okay. Makes sense.
So this is called reorganization, is nothing
Organization.
but just a folder creation,
Mm.
folder or a space creation
Yeah. Yeah.
for your specific structure,
Okay.
because we are designing Workday structure. So for a specific structure, I'm gonna create it. Is it clear?
Yes. Yes.
Now, supervisory organization. Supervisory organizations, you said group and companies, parent companies. Well, that's true somewhere. But if I talk about financial structure part, because we are discussing the Workday with respect to financials. So for the financial perspective, we can define any number of supervisory organizations in HR. But if for
Okay.
financial perspective, the one is mandatory.
Okay.
Why we are creating? Because all of the employees will be hired for my company under the supervisory organization.
Okay.
So one supervisory organization is mandatory. And even you define the supervisory organization here, create support. Let me check. Yeah, this one. No, this one, not this one. Let me check. I think the access having the login. Yeah, create supervisory organization. And when I try to create it, reorganization, it asks you the reorganization. So we define the supervisory organization only to, not for parent company, not for group, but to hire employees for
Okay.
our company.
Okay.
Okay. Okay. This is a very detailed topic in HR. So I'm not going into detail, but for the financial perspective, one free organization, one supervisory organization, that is mandatory.
Okay.
Then we have company hierarchy, company regional hierarchy, that is there. So if I talk about my organizational structure, and if I add up here one line, okay, and I fit in my Workday structure for my organization, for my people, for my financials, okay, all of them. because we need to fit in my organization Starlink structure within this Workday structure. So supervisory organization, we will define work supervisory organization. This will not part of any structure. Then we define supervisory organization, where we define all of our employees.
Okay.
Then we will define the company, and the group.
Okay.
Group will be my company hierarchy.
Okay.
Here I will define my company. For all of these regions, first I will define my regional hierarchy.
Okay.
Then I will define within that region. Then division if required, then divisions, we will define divisions as well. Then against department, we will define cost centers. And this is warehouse. Okay, for cost centers and cost center hierarchy, we have both here. For warehouse, we have inventory sites. And for location, we have locations.
Okay.
So basically, okay, within that, these two structure will be completed with respect of this structure. Okay.
Yeah.
Now come towards the financial structure. And if you remember in your financial sessions, you created charts of account.
Yes.
Against that, you created ledger.
Yeah.
You created fiscal schedules. Currency is already there. Convention is already there.
Okay.
So this is the, and that ledger, charts of account and structure defined under certain companies.
Yeah.
So here, if I go back once again, to Teresa, then we have, for example, my company is GMS USA. And under that company, this is a company that we have it. And under that company, we have ledger, ledger periods, ledgers, ledger year. Okay, this and for account, for charts of account, we called account set.
Yeah.
By the way, what is it's an interview question. What is difference between charts of account and account set?
So
you must.
I think it's the same. It's just the name convention that is different. Oh.
No. This is not the right answer. Okay, no problem.
Yeah.
Okay, account, charts of account.
Excuse me.
Under account set, we define multiple charts of account.
Okay.
In Workday.
Okay. Okay.
Whereas charts of account is the books of accounts.
Okay.
So we can maintain multiple books of account under account sets. And under account set, we have parent COA and child COA.
Yeah.
Have you discussed this in your sessions?
Yes.
Okay.
Yeah.
What is the difference between parent and child? Sorry, I may ask so many questions with you.
No, I like it. I mean, I like it. So the child of account holds the ledger account. Yes,
So, but
and
what is the difference between parent and child? Why we created parent and child in the system?
so in case you create a new company and you want to create a new ledger, you can assign the new ledger to the parent, so the parent can have multiple like ledger accounts. That's like
Okay.
my understanding of it.
Okay. So for the parent side and the child side, we will discuss, and the implementation part we will discuss, because um, that is important one as well. I think that you discuss in your session, but if not, then we will discuss this thing in a detailed way in our upcoming one. Okay,
Okay,
somewhere someday we will do that. So for
okay.
parent and the child is something that, for example, you have two companies that we discussed already.
Mm,
Okay, and you want that these two companies, we are using two different charts of account, but we want to take reports with respect of one charts of account. So what happened that we will create one parent, and under that two charts of account we will create it. One is the US COA,
mm,
another one is COA. Now, if I
okay.
want to take a report for both of them, then definitely we will move for
The
parent one.
parent. Okay, okay.
Okay. So that's why we created multiple charts of account with respect of our company wise, but to take the report, we create parent one.
Okay, okay.
Okay.
Yes.
Okay. Now that that is there, now moving towards our main part that we have discussed in our system, the charts of account we discussed structure, we discussed many areas. Now going towards the process wise, that is cash outflow.
Okay.
So what's in your mind in cash outflow?
So any payment that the business makes, maybe to supplier, like dividend payments, for leases, administrative salary, any money that goes out of the company is a
Fine,
cash
that's
out.
good.
Yeah.
Goes out money. Now, do you have idea that what transaction on which transactions you have your money is go out from the system?
Um, it could be like an invoice payment to a supplier for a product we purchased.
Yeah, that's good.
Yeah.
Fine. And
It could be salaries to employees.
fine, that's good. Okay, so meaning that cash flows outflow is more relevant with the payment side where the money is goes out.
Yeah.
And in the business process, the major flow that we are going through is P2P process
Yes.
or procure to pay process.
Mm.
So can you tell me that what are the steps having for procure to pay process?
Okay, so I mean, just to confess, I did a little bit of reading by myself since yesterday. I couldn't really speak on it, so I took some notes on it. So
That's good.
the first step will be requisition.
Mhm.
So that this is where like first will be identifying the need. So we would identify the need, then there's the requisition. And then there's a purchase order at some point. Then there's an approval of the purchase order. Then if the purchase order is approved, it is then sent to the vendors, which is our suppliers. And then if they also approve it, there might be some negotiations back and forth. and then the goods is received. So at the point where they've received the purchase order and they've accepted it, then a contractual agreement has been made. They have to deliver, and then we have to pay.
Okay. Okay, more or less you are right. You are right, the process perspective. Okay, we have here two processes, procure to pay and source to pay.
Okay.
That called that is P2P, and that called is S2P.
Okay.
And for P2P perspective, you are very right. But this negotiation part is the part of sourcing.
Okay.
Okay. So in sourcing, and then I will come towards P2P. In sourcing, that is very important that you need to have idea, because this is a majorly trigger point of procurement. For example, the need that you raised it, the need is there, and that need is that, for example, in your company, you have, we discussed there are finance department, IT, sales, they need some laptop for to run this Workday application.
Yeah.
Because it's a cloud-based application, so they need some laptops. So 5 required by this one, 10 they have required by IT, and 3 will be required by this one. So need is there. Okay. Now needs created, and we need laptop.
Yeah.
Now for this laptop, there are 2 ways to procure this item. This procurement laptop is number one is that you directly create a requisition and then create a PO. Requisition means that you require this item from certain supplier. But if you don't know the supplier, you are new in the business, you just open up your business, then definitely you need some authenticated or certified suppliers from where do you purchase a laptop. Okay. And that certified supplier may give you some discount as well. Okay, so what is happening there? Your business requirement is that you don't know the supplier most, or your business required that, okay, fine, you have the suppliers, oh, sorry, you have the requirement, but you need to have sourcing process there. To create these needs, you first create some RF, RFI, RFQ. Okay, request RFP, RFQ, and PC. So have you heard this abbreviation RFI, RFP, RFQ?
No.
No. Okay, fine, no problem. So RF stand for request for.
Okay.
Request for information.
Okay.
That is request for proposal.
Okay.
That is request for quotation.
Quotation. Okay.
Okay, why we need to have? Okay, so I just said that we need this laptop, 18 laptops, and we don't know the supplier in the market. So we need some information first to get the idea that how many certified supplier in the market. How many certified supplier in the market? Certified suppliers means, for example, you know that in laptop we have MacBook, we have IBM, or we have HP, we have Dell. So all of these companies have some certified distributor who authorized to certain distributor to sell their product in the market. Okay, so once the distributor is there and distributor take the responsibility, if something happened to this product, then we are giving the warranty, we will replace you, we will fix these things there for you. So that's why we need certified supplier. So you issue this RFI so that you got the idea that how many distributor or how many supplier in the there. For example, in one market, in HP, in one market there are three distributors, A, B, and C. They'll have two, X and Y. IBM only one, that is only IBM. They don't have any distribution. MacBook, they have M1, M2, M3. So, for example, you need this 18 laptop and you requested RFI. Okay, then only these people approach you. Okay, fine, we will provide you laptop is 18. Now, this RFI filled by these supplier highlighted one, and we say that
Okay.
4 supplier accepted our RFI.
Okay.
Now you will go for the request for proposal. Proposal of what? That you were just first phase, you just make an idea that how many authorized distributor they have it, and then you request a proposal that we need 18 laptops with
Okay.
this hard disk size is something 15 inches, hard disk is 500. Okay, then RAM is there, that is, you know, 12 GB, and power bank should be there. So we need this thing. So this is part of RFP.
Okay.
And
Okay.
RFP, against RFP, you need these force supplier that you have it. For example, if I put it this way, uh, M1, B, X, and Y. And this one is, if I put it here this way, M1 said that we will provide you 500 GB hard. If they said that we will provide you 250, this provide you can said that you 500, and they will say you we will provide 250. Size is here 14 inches. Here they said that we will provide 15 inches, and they will set 15, and this one is 40. So RAM is 20 GB here, 12, 8, and 12. Power bank, no, yes, no, yes. Now
Okay.
this is having some detail with respect of my RFP. They give me proposal that they will accept it, and they will provide you this product, this with this specification. Now you require them. Now you submit your RFQ. RFQ had 2 steps. I'm not going into the detail, but quotation they will say that I will offer you this laptop having $1,000, this laptop having $450,
Okay.
this laptop having $650, and this is having $400. So you take RFQ, request for quotation, and every supplier submit their quotation with price. And
Yeah.
against this request for quotation, you said that we will have PC. PC is price comparative statement.
Okay.
And they said that price comparative said that I compare all of these specs with the price, with the warranty, with all of things. And I said that, okay, fine, these are the 2 potential supplier to whom we can contact because their price are low. Products are
Okay.
similar, but one is both are giving power bank, but this is 14 inches and this is 15 inches difference.
Okay.
So probably that you will say that, okay, fine, you will ask the other question that either are you giving a warranty or not? They said that yes, we will provide you 2 years warranty or 1 year warranty. Okay, 2 years. And here they will say that 1 year warranty.
Okay.
So definitely to which supplier you will accept it?
We'll take B.
B. So you
Yeah.
make a comparison with respect of price, with
Yeah.
respect of all the comparison, and then decided this one is more relevant one. So this needs, this is called negotiations here.
Okay. Okay.
We negotiate with them $450 laptop, $450 per laptop. If we take increase our quantity, can you decrease your price to $400? Then you will ask you negotiate you, okay, fine. If you take 30 laptop, then I can decrease my price.
Okay.
Okay. So negotiation is the part of sourcing.
Okay.
So in a quick way, I explain you that what is a sourcing. So once this supplier is accepted, then directly you will raise a purchase order.
Okay.
So what is a purchase order? Purchase order is nothing but an agreement between you and the supplier that this number of laptops of this specification of having some payment details that they will deliver this item to you. So against that purchase order, there is one step missing, that is called receipts.
Okay.
You will receive that item, this 18 laptop, from this supplier B, and create a receipt. So when you receive it, basically you didn't pay anything yet.
Okay.
In your agreement, you write it that you will make a payment when you make a receipt. Then you will make a payment in next 30 days. Basically, when you make a commitment in the purchase order, basically you are creating an accrual here. Because you take the item, but you didn't pay something. So that's called accruals.
Okay.
We will discuss accrual in a detailed way as well. And when against the receipts we have invoice been shared by the supplier, then supplier will make, and then you will make a payment to the supplier, and that is your cash will be outflow. Because you pay something.
Yeah.
So tomorrow I will explain you that in an outflow, what is the accounting entry that has been generated against this process.
Okay.
And then I will show you in the system this outflow.
Okay.
Okay. Some outflow that you have seen already. Have you in your session and did this ad hoc payments?
Yeah, it was just a brief. So if there's any transaction that is not recorded in Workday, we create an ad hoc payment for that transaction.
Okay, fine. That's close to the definition. That's okay. But we will explain this. We will discuss this in a tomorrow sessions. Okay.
Okay. Okay.
So point is, we just started our Workday activity now. I have shown you something here today, but tomorrow I will show you some invoice and payments, and how to set up these cash outflows in the system. We will discuss it in detail.
Okay.
See you tomorrow.
Yes. Have a good day.
Thank you. Same to you. Bye.
Bye.
Thank you for attending the session. I hope you all enjoyed it. Don't forget to like and subscribe to our channel. Also, feel free to ask your questions in the comment section below, and we will reply to them at the earliest.